If you own Nvidia stock, the next few months could change everything. But the real story isn't their $20 billion Grok deal or the $1 trillion revenue target. Nvidia's executives are quietly selling tens of millions in stock while claiming we've reached artificial general intelligence. We analyzed the deal structure, insider trades, and the China risk that could wipe out 25% of revenue overnight. We tracked every insider trade and dug into the export rules that nobody talks about. 4 warning signs are hiding in plain sight. First, why this $20 billion purchase is actually defense, not offense. Second, the massive insider selling while executives make bullish public claims. Third, the China export risk that hangs over 25% of their business. Fourth, the math problem with that $1 trillion target. Start with what makes this deal so telling. Grok's LPU chips aren't just different from Nvidia's GPUs. They're built to replace them for AI tasks. By buying Grok for $20 billion, Nvidia isn't growing their empire. They're buying their biggest threat before it could challenge GPU control. This is the move of a company that sees trouble coming. Most people see a $20 billion tech buy and think growth. Look deeper. These chips could run AI models faster and cheaper than old GPUs. So why would the GPU king spend $20 billion to buy a company built to make GPUs old news? Nvidia sees the threat coming. This isn't about growing the empire. It's about buying your biggest rival before they can challenge your control. Think Amazon buying Whole Foods, not to grow grocery delivery, to stop Whole Foods from breaking their model. It's not a perfect comparison, but the logic is the same. Buy what threatens your model before it grows big enough to challenge it. The Grok buy tells us Nvidia's leaders know that pure GPU power might not last forever. They're covering their bets by owning the tech that could replace them. For Nvidia holders, this is both smart planning and a warning sign. Smart because they're staying ahead. A warning because it confirms that even Nvidia sees cracks in GPU control. When the king of chips spends $20 billion on a threat, that threat was real. That defense move makes sense. But if you think that's worrying, wait until you see what Nvidia's own top people are doing with their stock. Now it gets wild. While Jensen Huang stands on stage claiming we've reached AGI and targeting $1 trillion in revenue by 2027, his own top people are quietly heading for the exits. We're talking about $92.3 million in open market stock sales by Nvidia insiders. This isn't stock options running out or routine schedules. These are planned sales by people with the best view of what's actually happening inside the company. The biggest seller? Top exec AJ Puri, who dumped $49.2 million worth of shares. That's not pocket change. That's a massive cut by someone who knows exactly what the pipeline looks like. Meanwhile, smaller wealth managers are buying in. This creates a classic pattern. Insiders who know the business are selling to buyers who are chasing the story. When the people with the most info are moving opposite to the people with the least info, that's a red flag. For Nvidia holders, watch the insider moves more than the public talks. Actions speak louder than revenue targets. When your own executives are selling while you're buying, ask why. Those insider sales tell a story. But there's an even bigger risk that could cut Nvidia's revenue by 25% overnight. But there's a bigger risk that almost nobody talks about. China makes up roughly 25% of Nvidia's data center revenue. That's billions hanging on export control choices from the Bureau of Industry and Security, or BIS. One rule change could wipe out a quarter of their business overnight. The crazy part, Nvidia spends only $80,000 per quarter on lobbying. That's less than what some tech companies spend on office coffee. For a company with this much revenue and 25% of it at risk from BIS action, that lobbying budget is either supreme confidence or massive oversight. The H20 chip was built just for the Chinese market to follow current BIS rules. But those rules can change fast. We've seen it before with other tech companies. The real question isn't whether Nvidia can hit $1 trillion in revenue, it's whether they can keep the billions they're already making from China. This is a yes or no risk that could cut their business by a quarter with a single BIS decision, yet it's barely mentioned in analyst reports or earnings calls. For holders, this is the giant problem that everyone's acting doesn't exist. When a quarter of your revenue hangs on regulations that change without warning, that's not a small risk. Finally, let's talk about that $1 trillion revenue target. Nvidia just raised their 2027 goal from $500 billion to $1 trillion. That's not just bold. That's needing a 4 to 5 times jump from their current run rate. They need to nearly grow their business 5 times in under 3 years. The problem? They depend completely on a handful of customers to make this happen. Microsoft and Amazon are their oxygen supply, and those same customers are quietly building their own chips. Amazon has Trainium, Google has TPUs, Microsoft is developing Maia. The companies writing Nvidia's biggest checks are also funding their escape plan. If these big cloud companies slow their AI spending, Nvidia's growth story falls apart. The $1 trillion target only works if these customers keep speeding up their spending forever. But big company spending goes in cycles. It always has. Cloud build-outs come in waves, not straight lines. Nvidia is betting their entire growth story on the idea that AI spending will be different, that it will keep growing without the normal slowdowns. Maybe they're right, but history says that all tech spending slows down at some point. When it does, Nvidia's focus on just a few customers becomes their biggest weak spot. You can't 5 times your business when your biggest customers decide to slow down. The pattern nobody else is connecting. Nvidia is playing both offense and defense, but the defense moves tell the real story. They're buying Grok to kill a rival threat. They're targeting $1 trillion in revenue, while insiders sell $92.3 million in stock. They're claiming AGI is achieved while spending almost nothing on lobbying to protect 25% of their revenue. This isn't the behavior of a company riding an unstoppable wave. This is the behavior of a company that knows the wave might break. The Grok buy shows they see tech threats. The insider selling shows they see timing risk. The China exposure shows they see rule risk. Put it together, and you get a company that's publicly bullish but privately hedging every bet they can. That doesn't make Nvidia a bad investment, but it makes their $1 trillion target a lot less certain than the headlines suggest. What to watch in the coming months? First, more insider trading activity. If the selling keeps up while the stock climbs, that gap tells you everything. Second, any changes to China export rules. A single rule shift could trigger a 25% revenue hit overnight. Third, Microsoft and Amazon's next earnings calls. If either signals AI spending is slowing, Nvidia's $1 trillion math breaks. Fourth, watch for more defensive buys like Grok. When the king of chips keeps buying threats instead of building them, the threats are getting real. The AI story isn't over, but Nvidia's actions suggest they know it's not as simple as the headlines make it sound. Today you learned why Nvidia's $20 billion Grok buy is defense, not offense. You saw the $92.3 million in insider selling, while executives make bullish claims. You discovered the China risk hanging over 25% of their revenue with almost no lobbying protection. And you understand why the $1 trillion target depends on customers who might not keep spending forever. This isn't about whether Nvidia is a good company. It's about whether the current story matches the hidden risks. Smart investors watch what companies do, not just what they say. If this kind of deep dive into what companies actually do versus what they say helps you make better investment choices, hit subscribe and the bell. We dig past the headlines to find the patterns that matter for your money. Thanks for watching.